Welcome back to the Wealthy Bucket. This is a money flow vision video. It is a midweek recap. We are in a number of long positions as the Fed and ECB are coming out with their monetary policy tomorrow morning. We just want our subscribers to be prepared as the positions we have chosen have not moved. We've been playing mainly sector ETFs to avoid some event risk due to earnings season. We just want to monitor the markets now just to make sure that we're not caught offside. Okay, so let's start off with our euro. The euro here is behaving as we expected. It's still respecting the trend here, so that is a decent sign. Dollar's been sputtering a little bit the past couple of days. It has traded up, but it has been sputtering a little bit. You can see pound here moving downwards, so it is a sign that dollar has a little bit of strength, as I mentioned a couple of seconds ago. So we want to pay attention to that, as we've been looking for a continuation of that correlation, which means dollar up, equities up, or a break in that correlation, which means dollar down, equities up, or vice versa. Vice versa meaning dollar up, equities down. So we're really paying attention right now. It's a critical time in the market. As you can see, the price action here for this week on dollar, it has traded up. And these are the past, it's now into Wednesday over in Asia. So you can see dollars trading back through our previous support levels. So that is pointing towards, based on the current market correlation, that equities should open up. Now, that is based on the current correlation. If you read our most recent Bucket Weekly, we are looking for signs of a break in that correlation. Currently, the S&P 500 futures are trading up ever so slightly at a 1.5 point, so that's a decent sign. It never tested technical levels yet this week, and by it I mean the S&P 500 futures. Let's move forward to the S&P 500 index, and you can see again the levels that we provided you on Sunday are still being respected, so that's a decent sign. The reason why we're providing this video is that the markets were opening up in the morning and then they were trimming off in the afternoon. So those are signs where we really didn't like. So we want you to be prepared a little bit better going into tomorrow's major news. So you have it now. The S&P is flattening out. The dollar is trading back up. Okay, so based on the current correlation, if dollar's up, we expect equities to move up. So that is a decent sign going into tomorrow. But again, you want to manage your positions just in case the market doesn't take the monetary policy coming out of Europe and the United States well tomorrow. And if that's the case, the market can sell off relatively quickly. So let's move through our industrial sector. Our industrial sector is a position we've held since last week. You can see here it is stalling a little bit. There is a continuation pattern here. This is why we're still in it. We still like it. I think if the market takes the news well tomorrow, we'll be positioned for a good run. Now, the material sector is a play that we've been in we were in last week. We got stopped out. We jumped back in this week. The price action hasn't been superb. However, it's still technically sound. So we're looking for reasons that, or hints from the market that it may sell off due to the news, as somewhere, somehow, people know things that retail investors don't know. We're waiting for this trade. We loved this setup for the transportation ETF. It hasn't moved. That's a little bit disappointing right now. So we're looking for a little bit of alarm here that investors aren't willing to dump cash back into the market just yet. The retail ETF, finally, it kicked in. You know, we waited 2 weeks for this. It's up a whopping 2 cents. I know that doesn't sound sexy by any means. However, it is a decent sign that it's finally broken through. Okay, so that's a plus here. The utility sector, by far this week, has been the best performer, and this was one of our ideas last week. We're going to continue running with it this week. As you can see, the price action here today, we talked about it a few minutes ago, that price runs up in the morning and sells off, and you can see that in the length of this wick here on the most recent candle. So we're still in decent shape with the utility sector. Healthcare we didn't get into. If you recall our weekly, price was moving too fast, or it's moved too far too fast. We didn't want to get into it, and it's still midway between major support and resistance levels. So to sum that up, you can understand that the markets aren't moving as fast as we would like in either direction, up or down. They're still stalling a little bit, and we believe that everything is in anticipation of tomorrow's news coming from the ECB and the Fed. So let's fast forward now and take a look at a couple of ideas that we offered through our MoneyFlow subscription service. The INFY here, Infosys, we love it. We've taken a big portion of this move already. However, we wanted to offer a new one. It hasn't broken through yet at 50.35, so we're waiting on that. We still like it. We have RAX, which we are in, and if you took it, you should be doing relatively well. As you can see on Monday, it flattened out. So let's take a look at RAX, which was one of our pure and fusion ideas on Sunday. As you can see here, the price moved into our buy area. We get triggered, and today it's stalled. It's actually traded back into our support levels. We're not going to move the stop here. We still like this gap fill, so we're going to leave the stop as is on RAX. Now, if you look at SPY was for our Fusion subscribers, and we had a bull put spread. We triggered on Monday, and today the price is stalled, and that's reflected in what is happening in the current market environment. Now, keep in mind, the point of this exercise is so that you understand, because the market is going to be reporting some important information tomorrow in the form of monetary policy coming from the ECB and from the Fed, we want to be prepared, and we want to prepare our subscribers that if we are making money on specific trades, it is important that you monitor these, because winning trades can quickly turn into losing trades, and you want to do your best to avoid that. One, it pisses you off. Two, it messes around with your trader psychology, and you want to avoid that at all costs. Remember, even if you have a price target, it can be modest or it can be way out in left field. Sometimes price just does not hit your target, and this is why we use our multi-asset model, because you really can see the inner workings in the fiber of where money is actually heading in the markets. And this is why we believe this is the best investment model out there. It's easy to follow. It's a little bit more laborious. However, it is the most high probable model available. Now let's take a look at Facebook. If you jumped into our Facebook idea, it was the first idea on our Bucket Weekly on Sunday, and obviously it hit the target. We didn't expect it to move that fast, but we're not going to complain. Okay, so if you are still long the stock and you didn't sell it for whatever reason, that's okay. There's a good chance that we can see price move back up to about 41. We'll call it about 41.30 to be comfortable, so that you're not trying to go for every cent or pick tops and bottoms. Just take the profit off the table. If you're happy with where you're at and you didn't sell it, it's time to move the stop. It might be recommended that you move the stop up to where target 1 was previously located. So let's take a look now at the futures, so we can get a better understanding before this night ends as to what we may expect tomorrow morning to do. Our S&P 500 futures are trading up. As you can see here, it's trading up 1 3/4 points. You know, it's mildly bullish, I guess, for overseas trading right now. If the market takes the news well tomorrow, we should be in good shape. If not, then this is why we're having this session right now, is that it may be wise to take money off the table so that we can reassess the situation based on our market timing model. We thank you for coming by and stopping by the Wealthy Bucket and checking out our Money Vision video. If you haven't subscribed to our YouTube page, we highly recommend that you do. Follow us on Facebook, follow us on Twitter, tell your friends. If you feel that financial literacy is important to your family or friends, share it with them. You know, obviously we love referrals, and we sincerely want to help others out there. Thank you for stopping by. The Wealthy Bucket.